we'll give folks a few minutes to hop on here and join, but thank you for tuning in for our 2023 Triennial Property Value Tax Update and tax credit conversation here. But we'll give folks just a couple more minutes to hop on the webinar. This will be live streamed on social media and then also recorded for our website and YouTube channel so that you can come back to it, or folks can watch this later. You can share it with people too. But we will be starting here in just a few minutes as we wait for a few more folks to hop on and join. Alrighty, so we'll go ahead and start. Thank you for tuning in today for our 2023 Triennial Property Value Update and tax information. If you're tuning in, this is a webinar, so only folks that are on the webinar can see me. You can chat in questions if you'd like, and I'll answer them as we go along. No one else will no one else will see your chatted in questions. And then this webinar is also recorded and is live on social media, and then will be on YouTube later. But that's why we use the webinar format, so that folks only see and hear us talk, and can still chat in questions and share things. Same thing on social media too. Can type in questions, and I'll answer them as we go along here too. Thank you for tuning in. So today, essentially the agenda, pretty straightforward. We're going to talk about our updated triennial property value process, where the values come from, what does that look like, how essentially will it impact you. We just get word today that the Treasurer's Office has been able to mail out the tax bills, and those will be mailed out next week on Monday. So you can get your tax bill in the mail, and you can also actually download. We've had them up since January 8th. Download them off of the auditor's website, and I'll show you the website here in the middle as well, for you to be able to see the website and kind of navigate it a little bit. We'll go over the basics of values, where they come from, taxes, tax rates, and the auditor's role in the process, and then some credits and some information too for you to be able to use for you or family. Again, feel free to chat in questions. No one else can see you or your questions. Same thing on social media too. And type in questions as we go along, and this will be recorded for folks later. So some key takeaways that we always start off with and to remind you of. One, value increase does not equal the tax increase dollar for dollar or same percent. Unlike sales tax, unlike income tax, your value increase or what you're spending does not equal the same exact rate and the same percentage as what your tax rate increase is. And we'll go into why that is and what that process is like. But as your value goes up, your actual tax rate will go down, and then vice versa. And typically, now we did see some exceptions to that this year, depending on certain properties and certain taxing districts. But by and large, your tax rate increase does not equal dollar for dollar your value increase. Next key point, our office does not just essentially automatically raise taxes or automatically do value updates or tax updates based on needs of local communities. Property values, property taxes are the most democratic form in a sense of taxation. We, the voters, pass levies, which add to our tax bill. And then we, the property owners, buy and sell property, which then add and contribute to the value side. So our role is really just to follow the market, update values based on the market. And then there's some other pieces there too, things like inserting CEV values from the state. We're working with local entities to change tax rates depending on what needs are. We're going to touch briefly on CEV at some point here, but that's a state program with a state formula. We are all creatures, as county auditors, creatures of Ohio law. And we can only have so much discretion in some things. And CEV tax credits, for example, are things where we really have no discretion on the rate side or no discretion on your actual tax amount side. We'll have discretion on who can qualify. And value updates are a state mandate that happens every 3 years. So the last one there, as this is state policy, there are some things that just have to happen. Value updates have to happen. That's part of essentially making sure that we're treating everyone equally. But a lot of other things, there's flexibility and there's different interpretations and different things that we can change in terms of state policy. I encourage you to contact your state legislator. So how is value determined? So every 3 years, like I said, we update value. In 6-year cycles, every county will update their values in what's called a mass revaluation. That's where the auditor's office will go. In our county, we've got about 80,000 parcels. Our office will go and we will evaluate every property on its condition, on its changes. We'll value each property on its own merits, essentially. And we'll go out and look at every single property. That's every 6 years. Our last mass reval was in 2020. Our next mass revaluation is in 2026. So every county has these same time frames, every 6 years, mass revals. In between those 6 years, a triennial. So every 3 years, we're seeing property value updates, but not every county has them at the same time. So for example, in 2023, what we're talking about for our value updates here in Ashtabula County, Geauga, Mahoning, Trumbull, same update cycle. Here in 2024, Lake County will be updated, Portage as well. So every county has a different time frame, but we're all in the same 3-year cycle. The State Department of Taxation will essentially look at all of the transfers that happen through the county. We get transfers every day through our office. They'll look at sales, we'll look at sales. And in a triennial, we are not going out and looking at every single property. What we do instead is we look at sales and how they compare to our values. Our, perfect example, we could have a property valued at $100,000. That property just sold for $150,000. So that's a sale. That's a percent increase. We will track essentially all of those sales to see in neighborhood by neighborhood where have the increases or decreases been happening, and what do our old values look like in comparison to the sales that are around. So our role is to follow the market, to track the market, and update based on the past 3 years. And ultimately, what could you sell your property for on January 1st of 2023? That's really the question in terms of the value side that we're discussing. So we looked at essentially a strong growth in the real estate market over the last 3 years. Since our last update in 2020, over the last 3 years, the market has really quite grown in terms of what properties are selling for. And therefore, what can your property sell for on January 1st of 2023? And I know, it's difficult to say because you're not probably selling your property, or you didn't want to sell your property in January of 2023. Unlike sales tax or income tax, where we're applying something directly to an action that you took, purchasing something or income you made, with property values, we're essentially taking a snapshot in time in terms of what is a property worth. We'll go neighborhood by neighborhood. Typically, there might be 200 or 300 properties or homes in each neighborhood. And we'll track all the different sales that happen over the last 3 years in that neighborhood, and then update values based on those sale differences. Now, this is not on the CAUV side. We'll talk about that. CAUV, essentially, the state will have a value that we insert in for those agricultural properties. But for non-CAUV properties, when it comes to like vacant land, for example, we did this past year update all vacant land values. We did not update commercial land or commercial properties. There weren't enough sales on the commercial side to be able to say for certain or with more certainty where were values moving. There were enough sales, obviously, on the residential side to say where are home values moving. So those are determined values, and then we'll take a look at tax rates and amounts. When you pass levies, that adds a tax rate to your tax bill. When you don't pass levies or don't renew levies, or levies fall off, which do happen, then your tax bill has those removed from the tax bill. And what we'll do is we'll calculate all values. Then we'll go through, we've got 69 tax districts here in the county with multiple levies per tax district. And we'll go through levy by levy and look at all those different rates. There is an opportunity to appeal the value of your property, the new value. Informally, it was this past fall. We sent out postcards to every property owner, and they had the opportunity to informally appeal their value. There's a formal process now called the Board of Revision, which you can apply through April 1st of 2024. Essentially, what you're saying is, what do you believe your property could sell for on January 1st of 2023? If you think our value is incorrect, give us then the data and the information to tell us, well, what could you sell your property for during that time period, and why is our information incorrect? This is where you can take a look at your property page. You can see, do we have the wrong square footage? Do we have the wrong age? Is the condition different than what we shared as? We need to have that data to know, why are we incorrect? The best example is a sale. If a sale happened over the last 3 years and it's above what our new value is, that's good information to appeal your value. But I will be very honest, and I've always been honest on this topic and all others with this, that we are still seeing transfers happening, listings happening in our county, even after new values, at an average of 25% higher than our new values. That's not every case. Again, with 80,000 or so parcels, we're one, going to make mistakes or miss something, or two, there's going to be exceptions. But by and large, we're still seeing here in the month of January an average of 25% higher than our new values, which is quite crazy. So this is a good map for us to be able to show you. We've got much bigger versions on our website. I'll show you where you can find some of these. And you can look them up a little bit more kind of closely too. Here on the left are all the sales that we use to determine values. You can see quite a bit in our more populated areas, obviously. Even in our more rural areas, we had a good number of sales over the past 3 years to be able to warrant and to see where we can move values. On the right side are the appraised value changes by percent. So you can see that the lighter the orange or yellow, the lower the value change. You can see some, we went township by township, others, in Orwell, Roaming Shores, for example. We went a little bit kind of more in depth, same thing, Jefferson Village, Geneva, Ashtabula. So you can see that by and large, values across the county moved significantly, anywhere between 10% to 45%. And of course, a big piece of that is just where were the values prior. If you have an area that had higher values, we still saw higher sales, but not significantly as an area that maybe had lower values, but we're seeing higher sales. Their percentages are going to be a little bit different. So when we actually get into some of the tax basics, we always are asked this. So remember, an appraised value or market value is what we believe your property could sell for on January 1st of the tax year that we're looking at. In this case, it's January of 2023. The taxed value, we have this on our website and on your tax bill, is 35% of that market or appraised value. So when we apply the tax rate, what you pass as voters, we're actually applying it to 35% of your full market value. That's just essentially a placeholder number. We could apply it to really any percent or number, and the millage or the tax rate would be adjusted then to bring in the same amount of revenue. Tax rates are expressed in mills. So it's not as straightforward or as simple as an income tax or a sales tax where we're talking about just straight percentages, but property taxes, we're talking about mills. 1 mill is $1 of tax for every $1,000 of assessed value. And so what we look at is when you pass a levy, you're passing maybe a 1 mill fire levy, and that would be $1 for every $1,000 of value on your property. Most of the levies that you pass, most of the levies on your tax bill are what's called a fixed rate or a fixed amount of fixed revenue levy. And so when you're passing a levy, what you're actually doing is not passing the tax rate, how many mills, but you're passing the amount of revenue that local government can collect. If a levy passes this year and it generates $100,000, that levy will always generate $100,000. As values go up, we'll actually decrease the tax rate to bring in the same amount of revenue. And that's what's called an effective tax rate, where we've decreased the tax rate to bring in the same amount of revenue. Now, and we'll get to, you're probably saying, well, why do my taxes go up every year then, even if my value stays the same? Or even if my value goes up, why do my taxes still go up? If you say that we're bringing in the same amount of revenue for all the local entities, where's that money going? We'll talk about that. So a great example, your total appraised valuation is $100,000. You have a 1 mill new levy, and your payment would be $35. You take your value, you multiply it by 35% to get your assessed or your taxed value. Then you multiply it by your millage rate, your tax rate, which is 1 mill, $1 per $1,000 of value, and you get $35. So different types of voted levies. These are things that you'll see on your ballot, things you see on your tax bill. Renewals, renew the same levy at the same revenue with the same original voted millage rate. So, great examples are 8 mill renewal levies that happened in Edgewood schools back in the 70s. Because values have increased, those renewal mills have decreased tremendously in terms of the actual tax rate that we apply. And now they're right around 2.7 mils. It's a reduced tax liability due to fixed collection, fixed revenue. So as new properties are created, as different businesses come in, your tax rate will decrease. Your actual tax burden for that levy will decrease too. Replacements, what that does is essentially it's the same purpose of a levy, but it brings it back to no longer are we looking at the revenue side. You're approving essentially, let's apply that higher tax rate, the original tax rate, to my new value. So you're essentially having a tax increase because, for example, the Edgewood Schools example, that was an 8 mil levy that was passed back in the 70s. Now it's essentially being taxed at 2.7 mils, applied to your property at 2.7 mils, while replacement would bring that back to 8 mils. Same thing for this, a 2 mil replacement levy for Jefferson Township. The old collection was 1.3 mils because as value increased, we decreased the tax rate. If you agree to that replacement, you're now collecting at that full 2 mils. An additional levy, brand new levy, added to the tax rolls through voting and passing it, and that's raising the total effective rate. So I just got done saying that most of your levies won't increase your actual tax burden. Most of the levies are same revenue wise, but with higher values, we keep the same revenue mostly for local government. So why with higher values this year have tax amounts increased so much? Well, here are 3 reasons. And I'll show you on our website how you can see some of this. One is called inside millage. So I just told you that you vote on levies, you vote on the amount of mills that a levy will collect and their total revenue. There are exceptions to that. On every single property in the state of Ohio, there is something called inside millage, or 10 mills, which is $10 per $1,000 of your value. 10 mills, which is split between all the different local entities. And those move directly with value. So we're not decreasing the tax rate as values increase. Instead, we continue to apply those 10 mils directly to your value, whether it goes up, whether it goes down, and your local entities will be collecting that difference. So as values decreased following the 2008 recession, local entities received less money in inside millage because there are lower values. As values have increased here due to the booming economy of real estate, local entities have received more revenue from these 10 mils inside millage. Every entity has this, every property has 10 mils of unvoted inside millage. Now, on top of that, getting to some of the school funding side, every school in the state is guaranteed 20 mils, $20 per $1,000 of value of revenue. As values go up, remember we decrease the tax rate, those tax mills go down. And what has happened then is that every school in our county now receives less than 20 mils of revenue for their effective revenue for their school district. And so what then we do is we must apply the difference directly to your value. So you have X school this year that last year was not below 20 mils. This year, because of higher values, their effective rate decreased below 20 mils. Now we apply the difference in millage directly to your value. And that in our county could be anywhere between $0.5 mil to a $5 mil tax increase that was not on your tax bill last year, but is applied directly to your value this year because the school has decreased below the 20 mil revenue for effective millage. That has seen a large increase as well. And then there are new levies that have been passed this past year that are brand new onto your tax bill, that's applied to your new value, that then generates more revenue for the local entity because the voters passed it, but also generates more of a tax burden onto the property because that's a new levy. There are some levies that voters pass that will not be decreased or are not fixed revenue levies. Those are rare. They largely focus around bonds, for example. Really what the voters passing with a bond is the total amount of revenue, not per year, but over the lifetime of the bond. And so we will decrease the tax rate over time, but it's not a direct, as most levies that are passed, they get decreased with higher values. So on our website, you can actually see your tax dollar distribution. This was my old property in North Kingsville. You can go to property search, type in your address. Under tax distribution, you can actually see every single levy, when it was passed, what the normal past tax rate is, what the current effective rate is, how much is costing. So, for example, like I mentioned, you can see Ashtabula County, the bond, Ashtabula County General Fund, those are all direct. Those are not decreasing with revenue. There's not decreasing with value increases because that's inside millage. Same thing for the school and others. This is a good opportunity for you to be able to see when they were passed. We always look at this first when taxes go up to see if a levy was passed recently that increased the tax burden. There are a good number of credits that are available for property owners. Again, we have no discretion over, how much the credit is to folks. I've been down to Columbus to testify to increase the homestead, to increase other tax breaks too. This is something that auditors are pushing. There's owner occupancy. That's if it's your primary residence, you live there, you own the property. That is a very simple tax credit. Usually it's about 2% off the value of your home site there, of your property. Homestead, that's for folks who are over 65 and have an Ohio adjusted gross income of less than $36,100. That income threshold increases every year with inflation. The age does not increase. So this used to be pre-2013. This used to be once you hit 65, you could get on homestead. You were a senior, you could get on homestead. The state of Ohio, through our state tax dollars that we pay, makes up the difference for homestead. And so the state then in 2013 said this program's getting too expensive. And we're going to now means test it. So it's now just for folks who are receiving less than $36,000 a year in Ohio adjusted gross income, or are permanently disabled and own their property. So that's traditional homestead. The credit side, what it does is essentially it exempts $25,000 off the value of the property. Now, one of the legislative changes this past year was to increase for the first time since 2007 that $25,000 to inflation. What we've seen then is that over the years, as values go up, as tax levies go up, the value or the amount of savings for homesteads has actually been decreasing because there's higher values, higher tax rates. So what the inflation aspect now with increase in that credit amount, exemption amount, that should help to at least hold homestead constant in terms of savings. It's not nearly enough for what we need it to be able to increase to help seniors. There's disabled veterans homestead. So if you're permanently disabled 100% as a result of your military service, it exempts the tax of $50,000 off the value of your property. There's also CAUV. That's a tax credit for farmers, those involved with commercial agriculture. That decreases the value of the property. Essentially, instead of us using the market value for farmers, we track their soil types, and the state assigns a value per soil type onto the property instead. It's typically a much more significant savings, anywhere between 75 to 90%. So this is our website here. I believe you can now see it. Yep. And like I said, chat in questions, type in questions on Facebook as well, on social media, if you've got questions. But this is our website. We have tons and tons of information on our website. I encourage you to take a look at it. The first one that you're going to see right here, tax amounts now certified, all you need to know. This webpage has all the links. This webinar will be living on this webpage here soon. Has all the links that you need. If you want to contact your Ohio legislator to tell them of ideas or concerns you have, you can click there. First half tax bills are due to the Treasurer's Office by the February 21st. You can click here to visit the Treasurer's Office website. This is a great tool. You can actually see the sales in your area that were used to determine your market value increase. So if you click on this link, where you're going to go is now to a GIS interactive map on our website, where you can, this is Jefferson Village. So you can actually, let's say you happen to live in this house right here. You can zoom in and you can see here are all the sales in your neighborhood as to what sold over the last 3 years. And it gives you a good idea to see, you know, what was the value for that property? What did that property priorly, have a value for? So as an example, this property, it sold for $228,000. The old building value, the old land value. So this thing sold on June 30th in 2022 for $228,000. Our old value was $136,000. So we increased it based on averages in the neighborhood, but our new value is $188,000. It's still significantly lower than what the sale price is. Same thing for this property here, right next door. If I click there, that thing sold for $230,000 in August of 2022. Our old value was $113,000, new value is $156,000. So that just gives you one quick comparison way to see what values, where sales have been, just to help you in that sense. We're gonna go back to our webpage. So some frequently asked questions, some good things just to look at in terms of, what are oftentimes questions that were asked. Where will my tax increases go? This is one that we often get asked. I mentioned about with inside millage, with the 20 mil floor, where my taxes go. You can actually click here to view the tax increases to local district revenue. So this is a PDF that you can download. And what we have is essentially the ability for folks to see per school district, the total tax increase, the total revenue increase from the revaluation. So as an example, Ashtabula City Schools, their revenue increased by $1.7 million this year, which is equivalent of about 3.1 mils. just due to higher values. With that inside millage that we mentioned, they receive 4.2 mils of inside millage. And remember I said that every school district is guaranteed 20 mils worth of revenue. Ashtabula City Schools just received 17. So then we have to, as the auditor's office, apply 2.9 mils directly to every property to bring them up to 20 mils worth of revenue. And this is then the difference, the increase that they're getting, 3.1 mils worth, $1.7 million. You can see $4.14 million worth of tax revenue that Ashtabula City Schools has voted. 2.3 mils is not voted. That's essentially how the funding kind of model works. Here you can see this is the total increase in values for the school district. So we've got every single school district color-coded by school district, ability to see, Buckeye, for example, is increasing $1.1 million in revenue this year due to the reval with higher values. That's an equivalent of 3.4 mils. Or for a $100,000 home, that's increasing your tax burden by $119. So encourage you, use this as a tool to be able to look at all your different properties in your school districts. So lots of other information here that you can go through. You can see breakouts of your tax bill by chart. You can read about the revaluation process. You can see about your appeal process if you believe your value is correct, not correct, what to do, set payment plans, different options with the treasurer's office. Tons of information here. So you can also see how to go to your parcel page, download your tax bill. Please send folks to this website, share that information with people. We encourage folks to reach out to us if they've got questions too. You'll also see that as school districts or as local entities reduce their millage, reduce the amount of tax rate that they have, we'll let you know about it. So Pymatuning Valley requested a millage decrease of 2 mils, which was significant to property owners. It's saving about $70 for a $100,000 property. And it's more than $500,000 in a tax savings that they're giving to their property owners. Tax bills, like I said, are due to the treasurer's office by the 21st. Feel free to reach out to us if you've got questions after this. Again, this will be saved on our YouTube channel. It's up on social media. Let folks know that they can watch this. They can reach out to us if they have questions. I appreciate taking the time today to learn a little bit more, to see some more information, and I hope that you will contact us if we can help you out with anything else. Have a good rest of your day and stay warm today.